Nigerian oil share index is currently down about 0.02%, so slightly weaker. The early laggards include GT Bank, Dangote Sugar, NASCON, and Zenith Bank, while some of the gainers are MRS, Okomo Oil, Forte Oil, CCNN, and Wema Bank. For an update on what's going on in the market as we round up the week is Abiodun Kerikpe, a research analyst at Investment One. He joins us in the studio. Abiodun, thank you so much for joining us.
Thank you, Ole.
So a pretty interesting week. Of course, the MPC has been the big news and the impact that has had on the market. We've seen asset repricing across the board, equities, fixed income, you name it. They've all been hit somewhat. Your thoughts about how well the market has reacted to this? I think a lot of people thought the market would be a lot weaker. Well, what we've seen over the last two sessions that the market has stabilized a little bit.
Yeah, pretty interesting news flow from the MPC there. I guess the market was actually expecting some strong reaction from the committee, but we never really saw that they could move up the CRR by that magnitude. 50% CRR is quite, quite big. Really, the impact on the market is that we expected interest rates to actually, skyrocket almost immediately, but we've seen maturities from Treasury and normal bills in the last 2 days, which has actually dampened that expectation. Right. So I guess maybe today we would see what interest rates,
the full effect,
exactly, by today. And on the equity space, really, I think the impact has been reflected, perhaps, or to add with the correction after a 9 days rally, you did expect that equities should take a little breather there. So I think the two factors are actually playing out on the equity space.
Yeah, but my point is that I thought the equity market should fall back even more than it has.
We've seen 5 days of, slowdown. 9 days of rally.
After this MPC, or do you get a sense
after
that
the MPC,
before the MPC we already saw the correction, and then
yesterday
the MPC
we saw the market down by about 0.6%.
Right.
A day before it was about 0.85%. Those are two big losses in just 2 days. Today, it's been started off on a rather flat note. Currently, it's down about 0.05%. So I still think the impact is still weighing on the market, despite the results from Fidelity Bank, from Fort Oil. Yeah. We're not seeing that reflecting on the market immediately. Right. And those
I just thought that the impact should be more significant. But let's move on to those numbers that you just talked about. Fidelity Bank, 21% rise in earnings per share. Your thoughts about the half-year numbers?
I think the number is quite good. The growth we're seeing there quite strong. Massive growth. The bank actually has been focusing so much on their retail end and trying to see how much they could tap into that market so as to boost their performance, and I think that's playing out for them in this half year. The question is, if you look at the deposit line, there's a marginal decline in deposit there, so which means the balance of it is not really showing on the numbers yet. The retail play and the balance of that is not showing on the deposit side. But on the loan side, about 7% growth in their loan book. I think that's quite okay with the
But I think the consensus is that banks are going to be hit by this MPC decision. So your view on Fidelity Bank, do you think this is one of the banks that will be hit more or less?
I don't see Fidelity Bank as being directly hit by that MPC's decision, because they are really not a big player in terms of pulling or sourcing deposit from the public sector. They're really not a big player. Those that I think will be most hit are maybe First Bank. Right. I think First Bank will be most hit. About 27% of First Bank total deposit as a Q1 was gotten from the public sector. I think the Sky Bank also might take a hit from that MPC's decision.
All right, and what about Forte Oil's numbers? Those also pretty positive numbers. Your thoughts about where petroleum marketing stock doing pretty well in terms of earnings? I think that's a bit of a surprise given the dynamics in that industry.
Yeah, the dynamics in the industry, but if you look at it, over the last 2, 3, 4 weeks, let me say about a month ago, they've gotten some subsidy, funds back from the federal government, and I think that's actually in a way up to cushion their books. So I think the balance of it is playing out well for them. The PIB actually should open up new opportunities for them in that industry. We've seen some level of cleanup in the industry, and I think it's better puts them on equal playing field to actually harness opportunities in that sector. So for oil, with that number, I think it's quite impressive. impressive growth, yeah.
All right, let's move on to next week. Your thoughts about how this market is likely to play out. You just talked about the fixed income market, and maybe we'll see a lot more movement there when we see the full impact of the MPC decision. But what about the equity market? Do you think we're likely to see the market trend sideways, or do you think this is we're setting ourselves up for further declines?
I think looking at it theoretically, if when you expect interest rates to rise, then you did be expecting the equities market to slow down.
Right.
But you know, over the equities market have different cycles. There are short cycles, there are extended cycles, there are longer cycles. So within a very short cycle, 9 days of positive gains, 5 days of slowdown. I mean, you wouldn't expect that slowdown to last for another 10 days. So over the next week, I think there will be some level of upward repricing in the equities market. It may not be sustained for a very long while, but I expect next week should be positive for the equity space. Added to that is the fact that we are seeing some impressive half-year numbers, which is one of the key catalysts we expected would drive markets in this period of the year. So those numbers are coming out.
Those numbers are coming.
So I think they would help to weaken whatever negative sentiment higher interest rates would have on the equities space.